Welcome, ladies and gentlemen. We're back with you again with part two of the partnership arrangement. At this time, we have a structured question, and might I add, one that has been used in an examination context, 2017, I think. All right, we want to show you how we may now use the information provided to prepare the current account, the profit and loss appropriation account, and the current account. All right, so the partners in the business are Barney and Swiper. They are in partnership, and the capital introduced by Barney is 60,000, and Swiper has introduced $35,000. Joins $4,000 for Barney, $12,000 for Swiper. Their total income is $82,000, or what is also referred to as their net profit. Barney is paid a salary. What can we deduct from that? If Barney is paid a salary and Swiper is not paid a salary, it means that Swiper is a sleeping partner. All right. Interest on capital is at 5%, and they also have interest on joins 10%, and the shares of profit is at the ratio of 3:2. The current account balance, their previous current account balance shows that Barney has a balance of $2,500, and Swiper has a negative balance of $600. Let me just jump into this and explain. The current account is a liability account, and therefore the normal balance would be on the credit side, and of course it indicates, so once there is a credit balance in the liability account, in the current account, beg your pardon, for each of the partner, it means that the partner has money in the business, or money that he or she can withdraw, right? Because it belongs to them. It has already been allocated to them. In respect of Swiper would be, it is showing that Swiper has overdrawn his account. It means that he has taken more money than he should, $600 more than he should out of the partnership. So it's owing. So Swiper would have a debit balance, right? But there's one other matter that I'd like to share with you before I even enter into working this out. And that is, in our last lesson, we were talking about the partnership deed. And we indicated at least 6 of those clauses that the partners would work out and agree on to conduct their business. Now, where the law indicates that where there is no arrangement, no formal arrangement, no partnership deed, then the partners must share their profits or loss equally. So they share profits or loss, right, equally, right, if they do not have any formal partnership agreement or arrangement. I wanted to establish that information. Very, very, very important that you are clear where that is concerned. And in that event as well, I must say that the partners are not allowed to have interest on capital, and they are not allowed to have any interest on join. So no, they are not allowed to have, so no interest on capital or joins. All right. So once there is no partnership, when there's not an existence of a formal agreement in terms of the partnership deed, then they must share profit and loss equally. And secondly, they are not permitted to charge any interest on capital or interest on drawings. All right. Shall we now go to the question presented to us, and we're going to begin to look at the appropriation account. Profit and loss appropriations account. All right. So our profit and loss appropriation account for the year ended, and that would have been March 31st, right? No, so March 31st. No. Now that we have ruled up, we're going to take the information. So the first thing we are going to be doing now is that we're going to be entering the net profit. Now the net profit indicates that it is $82,000. In the arrangement of the partners, we are told, in the arrangement of the partnership, we are told that joints, they are charging 10% on interest on joints. 10% is charged on each of the partners' withdrawal. All right. So joints here for Barney is $4,000. So let's work it out here. So $4,000, right? And they are charging per annum, they're charging 10%. So it is 10 over 100. But of interest, I want to point out, ladies and gentlemen, that they indicated to us that this amount of money was withdrawn during the period starting October 2014 to March 2015. If you then add up the period, how many months then would this fall would be? It will come up to 6. October, November, December, yes, January, February, March. So 6 months. So it's going to be times 6 over 12. 12 months make a year, so over 12. All right. When we calculate this, the answer we're going to get is $200. Right? 10% of 4,000 would be 400, and half of 400 is $200. All right. So this would be the interest on join. So we go now add interest on joins. Okay. For Barney. And Barney is going to be $200. Now for Swiper, they tell us that it is $12,000. So it's going to be 12,000 times 10 over 100. That is 10% we're charging. Yes. How long, between what period did Swiper took $12,000? Between January and March, which is 3 months. So it's going to be times 3 over 12. The answer we're going to get is going to be 10% of this is going to be what now? 10% of it is going to be 1,200. All right. And we are going to be taking a quarter of 1,200, which is going to give us 300. All right. So the amount of interest then for the period would be $300. We're going to add these two figures. We'll get 500. Yes. Then this would now become 82,500. This is the total of money that we are going to be allocating to the partners, Barney and Swiper. We are told that they are charging interest on capital. So we're going to deal with that now. So that we do not have any interference. Let's draw a line here. Kind of make it a little bit more structured. All right, so we're going to less interest on capital, and we are doing it for Barney and Swiper. Now, interest on capital is 5%. So we'll find 5% of the, for Barney 60,000, that is 60,000 times 5 over 100. Okay, and then we'll find for Swipe 35,000 times 5 over 100. All right, now it is indicating that when we work this out, it is going to be 3,000. And for Swiper we'll get 1,750. Okay, so when we work this out, we'll get 3,000. Work this out, we'll get 1,750. We're going to add these two, and we are going to get 4,750. We're going to move to the next activity. We're told as well that salary is paid to Barney. So now we're going to have salary, and it is going to Barney, and the amount is $36,000. Okay. All right. So now that we have entered, we have allocated. We are now allocating their monies. We're going to add this, and what we'll get. Let's do the math. 0, 5, yes, and 7. We take this down, that's 10, right? And then if it's 10, then we carry 1 over before, so it is 40,000. 40,750. Our next move now is to subtract this from this. Okay? Alright, so we're going to get 0 here. From 10, that's going to be 5. And then it's going to be 7 here. And this is going to be 1. And this is going to be 4. So it is $41,750. After we have shared all that was required to be given to the partners, we have $41,750 left. I'm going to double line this. I'm going to move as well too. So we're going to share that money. So we go to what is referred to as the section called shares of profit. And we're sharing profit between Barney and Swiper. Now Barney, let's go. It says that his shares of profit is the ratio of 3 to 2. Remember what we said we're going to do? We add the two figures. Yes, because 2 partners, so we add the 2. So that is going to be 5. So for one, it's going to be 3 over 5, and the other is going to be 2 over 5. Right? No. So for Barney, it is 3/5, and for Swiper, it is 2/5. So we'll find 3/5 of 41,750 and 2/5 of 41,750. All right. Now, what the answer, when we work this out, we're getting 25,050 for Barney, and we're getting 16,000 700 for swiper. Now we must add, if we add this and it is not giving us this figure, it means we are not done sharing the money properly. So this is going to be 0, that's 5, 7, when we add in, 6 plus 5, 11, so put 1, take the other, 3, 4. So we have done it correctly. Alright, so we share the profit. This is the appropriation account. We are now going to move to do the current account, which means I'm going to do some shifting here. All right, so we're now going to be doing the current account. So we have current account, details, and we have for Barney and Swiper. Details, Barney and Swiper. All right. So the first thing we're going to do now, we're going to put in the balances. All right. We're going to put in the balances in relation to the partnership current account, and they gave us here. So the current account is showing that Barney has a positive balance, so a credit balance. So we put it here. Balance brought forward of $2,500. It is bracketed, and once it is bracketed, it's indicating that this is a negative balance. All right. In some cases, ladies and gentlemen, they would put credit beside the CR and DR. Right? What they are indicating to you is that this is a credit balance and this one is a debit balance. Once, as I said earlier, the current account is a liability account. And once it is a liability account, it means that the account opens with a credit balance. The credit balance will be, the opening balance will be on the credit side. Yes, the balance BD or BF is going to be on the credit side. Now, once there is a situation where the partners have a debit balance, a debit opening balance in the current account, means that that partner has overdrawn his account. He has taken more money out of the company or the business than he was allocated to him. All right. So with Swiper, we're going to have the balance here, balance brought forward, and it is going to be $600. All right. Let's get on quickly now. The appropriation account, you allocate it. In other words, you check up the money and how you're going to be giving to the partners. And in the current account, you are now allotting or assigning, or you are paying over, yes, to them. Yes, so the current account is, what we're doing is now assigning the money, or we're paying it over to each of the partners, or we are assigning it, or so on. All right. So let's do that now. And so we're going to be transferring the information from the appropriation account to the current account. And I want to make it for you to get it easy. Everything in the appropriation account, save except the net profit, will be going into the current account. Everything in the appropriation account will go to the current account except the net profit. All right. Now, one thing I want to point out, when we come to the current account Having entered our opening balance, I think the only other new item that will come in the current account will be the joins. Yes? And the joins is going to be on the debit side because it's a reduction on the amount of money or resources that the partner has in the business. So we'll enter joins. Now, the joins for Barney was $4,000. And the joins for Swiper, I think it was $12,000. Yes? 12. All right? Then we're going to pull now our interest and joins. Which is 200 and 300. So on the debit side, it is showing what the partners, yes, how the reduction of what the partners have in their in the business, right? Or a deduction, or a reduction, yes, deduction or reduction, right, of what they have in the business. So these items are reducing the value of the amount of capital or monies they have in the business. Now, all the other items are going to be on the credit side. I like to make it simple, and that is what is important, making the whole process simple. So when you come to the current account, having entered the opening balance, yes, there are two very important items that are going to be on the debit side. The joins and the interest and joins. Okay? Everything else from the appropriation account will be going to the credit side of your current account. Let's do that now. So we have the interest on capital. Interest on capital, we have 3,000 for Barney and 1,750 for Swiper. Salaries is paid, and it is paid to Barney of $36,000. All right. Shares of profit. So no money is paid to Swiper. So Swiper is a sleeping partner. So shares of profit now. And that is 25.05, and we have 16,700. All right. So you would see that what we have done is that all of these items are on the credit side of the current account, right? The interest and joins go to the debit side, all right, with the joins figure. Right, so this is reducing what they have in the business, and these are the income that are the earnings that they are getting from the partnership. All right, so what we need to do now is to balance off this account, right? So we're going to get into the process of balancing the account. So what we're having here now, let's get on to balance off the current account. What we'll do is that we're going to be comparing this column against this column. We're going to add up the total of Barney on the debit side and the total of Barney on the credit side. When we add the total of Barney on the debit side, we're getting a figure of 4,200, right? When we add the total here for Barney, we're getting a total of 66,550. So what we're seeing then is that on the credit side, it is more than what is on the debit side. So we'll subtract the smaller figure from the larger, and the difference is going to go on the side that is smaller. All right. So when we subtract 4,200 from 66,550, our answer is 62,350. So that is the balancing figure for Barney. Balance CD. Alright? We're going to do the same comparison for Swiper. So we're going to add the total here. The total for Swiper here would be 12,900. The total for Swiper here is 18,450. Alright? So we'll subtract the 12,900 from the 18,000, yes, 450, and we're getting a difference of 5,550. So now we have balanced the current account, so we're going to close it for the end of the period. Draw the line in the same level as per usual. Yes. Now the total here would be 18,450. Total 66,550. If we add everything here, it should give us 18,450. If we add all of this, all three items, it should give us a total of 66,550. We can now double line. Right, do the same here. And as I often say, once we have a balance CD on one side, the BD comes over on the other side. So we're going to go and write balance BD, and this is the first 6,2,3,50, 5,550. All right, so we would have completed the question in preparing the appropriation account and the current account. Hope that you have garnered much understanding at this time. We thank you very much for sharing. We love when you communicate with us and tell us what you need for us to do. All right, hope that you're clear. We are going to continue sharing more examples. So in our the third part to our partnership accounting, we're going to be doing some other exercises that will give you a greater understanding of the concepts. Thank you very much. If you like this lesson, please click below the like button. Thank you very much.